Good morning, everyone. This is Rose. Today is Monday, January 29th, 5 minutes after 9 a.m. Okay, so let's begin. So let's start with the monthly chart. All right, so the monthly bar is still very bullish and still making its way further up to the all-time highs and possibly want to go higher. And bears see a trading range that lasted more than 30 weeks. So they are they're trying to, I'm sorry, months, not weeks. I'm sorry, I thought I was on a week before for some reason. But you can see that in order for trap the bulls, we really need to get above the all-time highs. If we do that, this long-term trading range that what the bears see could create some kind of a double top lower high and a reversal back, maybe the midpoint of this 37 month or 36, I'm not sure, I haven't counted, but 30 plus month long trading range. So but that would probably create 10 bars, 2 legs, move down to the midpoint, maybe 33% pullback to the upper lower part of the upper third of this trading range, and the bulls can still buy that pullback. What they see is a strong bull channel here, so they see that any pullback could be minor, and then they can buy and get a new breakout. So we're still very bullish, and the month is bullish. You could see that buying the prior month's close pretty strong. But on the weekly, we have reached some of the trend lines here. If you take it from the February 2nd, July 27 or 28 and then the January 26th, either way, or you can take it from here or even here, we have reached the upward channel line. So you can see that we have a very strong bull channel here. The bulls want to break out and follow through. Even if we pull back, you can see that since the October 27th, we only have a 1 bear bar and no follow through for any bear bars. So it's a pretty strong bull leg getting follow through. Bulls see this as a possible spike pullback channel that could last more weeks, not only to the all-time highs, but furthermore up. So we'll see how market is going to react to these highs, whether we're going to trap the bulls up there or not. But if we do trap and market for some reason starts to pull back, bears need to print more than 1, 2 bars, okay, closing on their lows to create some kind of a pressure back to the EMA, back to the July high, back to the EMA. But most likely, look at the gap towards the EMA. We have so much pressure here, and most likely they're going to buy the pullback, or they're going to try. Okay, you can see that there's a squeeze going on here, a short squeeze, but we haven't really reached these highs. What happens is that when the market becomes bullish, everybody buys it. Generally, it's the wrong time to buy, too early to buy. So you have to expect a strong pullback back to the EMA. And everybody bullet, stock, start to sell, and then right around the EMA or the prior highs market is going to try to trap those new sellers. So they will probably try to trap the bulls and the bears. And if we can get that kind of a trap after that pullback, market could be still very bullish, and then we could squeeze out the bears, and market could become a lot more bullish to get to these highs even further. But that would require up, down, some sideways around here, but not necessarily coming down and testing the October 17, because we have gaps here, and these gaps most likely to be holding. Now, when do these gaps don't hold? When you start to see, say we went up, and when you start to see really strong bear bars, okay, surprisingly strong, coming down more, goes sideways, that is going to break even this support, and then that could bring us all the way down here, and that could create a strong bear leg down. But we have to have very strong bear bars, strong leg down, not just one, but several, and so that could actually accelerate, and then we could close these gaps. We don't have that, so market is still trying to make its way above these trend lines. On the daily, I've used this high. I'm going to connect those. So we have still room to the upside, and market is still trying to go higher. But I want to talk about the weekly. This is a buy signal bar. So market is still always in long. It still favors the bulls. I need to see bear bars to believe that the pullback with 2 legs or so back to EMA will start, and I don't have that. So on the daily we do have a double top, okay, with the 20, I think that's the 24, yeah. So is that enough to turn around and sell? Well, right now the market is at 49.1650. We could be still making, we have targets above, we could be still making our way up. So this would be possibly a sideways. We might come down a little bit, maybe test this area. I mean, there's a gap here. We might need to fill that gap. But chances are bulls are waiting, and we're going to go higher. So there's a trend line here that we haven't broken. There's a trend line here. If we do come down, I need to fix this. If we do come down to this trend line, okay, is the break, buyers probably waiting. There's a gap here. There's a gap here. Bunch of gaps here. So you can see this is tight bull channel trying to go higher, and the first pullback and a break of the trend line, buyers could buy and just turn around, and we could just make another leg up. So it's still a bull market. So the market is still making its way up. But here is the problem. There is if this whole thing is a one big leg, pull back sideways, bull flag, 2, pull back, another bull flag, 3, okay, is we now have a double top. And I don't know if this day, I think that's doji, not necessarily a bear day, but it's doji. But look what happened. We found sellers right there. So we start to sell today, and we start to come down and test these lows. We might come down a little bit more, only to get back up again. So these highs are still going to be targets for bulls to further go higher. But today, we're going to open up around right here, okay? And today it can come down. And if we do come down, we have a double top neckline here. Bears want to take out that neckline of this doji, the middle candle, and they want to get a bear flag and sell. But if that fails, that would become first leg pullback, second leg. Remember, this is daily, by the way. So we could go down, sideways, a little bit more down, only to find buyers. Even if we close this gap, I think the buyers are waiting down here. So if today becomes bearish, know that the market is trying to come down to this tight trading range, lows. So either that day's low or the neckline right here. Okay, so that's the only caveat I see for today. That we could be bearish today. On the hourly I use the RTH format template for this chart. These are hourly bars. So what I look at is a Monday, Tuesday, Wednesday, Thursday, and Friday. Is the midpoint of last week is important to me. So if market wants to come down there, that's fine. I would assume we would go below that, and buyers still be waiting here. We have slight gap here, is we might have I don't think we have a gap here. This one closed already. There is a slight gap here, but if we start to close these gaps, this is actually a reversal pattern on a 60-minute chart, right? So that means I need to see here's what I need to see. This is enough for me to say that market wants to move underneath the EMA, start to close bear bars. We will pull back, okay, a little bit, but that could create a bear flag, lower high bear flag, and we could end up testing the 50, this is 50 EMA, and then we could thoroughly test underneath and then finally go right back up. That would create a double bottom bull flag that could also break out to the upside. So if market is trying to make some kind of a bull flag here, their targeting is way below the 20 EMA towards the 50 EMA, okay? And we could get a double bottom right here, or 1, 2, 3 wedge bottom, double bottom, higher low. This could still become a bull flag. It's just pulling back. It's just too high to buy. And market sees 1, 2, and 3 wedge top. It wants to test these lows, and the buyer is probably waiting at the 50 EMA. So if we become bearish, I'm not only going to target is way below the 50% midpoint of last week, but also further down, okay, to this area, that green line, a little bit above perhaps. If we keep the gap open, we're still very bullish. It could be just a deep pullback and buy. So I'm going to look to see if we can get some kind of a double bottom here or there, somewhere in between. That means this green zone is a buy zone. Globex 15-minute chart is market is, let's see, we're just about to start in less than 15 minutes. We do have leg 1 already and leg 2 pullback. We could be in the works of making leg 3, but we could get a double bottom and a trap. The Asia high is right there, 1325. We could further come down. I'm trying to see what else is in here. This is a tight trading range here, by the way. So some kind of a complex left shoulder head and complex right shoulder that the market might be seeing some kind of distribution, but look at here. So I don't know how successful head and shoulders pattern this is. If market sees is as a head and shoulders, that's fine. The only problem here is that this makes up the left shoulder. So that means if we can trap the bears and invalidate this, remember, head and shoulders patterns need large bear flags. If we can invalidate this neckline and the bear flag, market can take out these highs and get right back up to this level. That will put us into large, we're already in a trading range, kind of angled up, okay? So it's kind of a very wide bull channel. But if we can trap the bulls around here, we're going to get right back up to these levels. So for bulls, for bears, if bears see this as a bear flag, maybe 1, 2, 3, or 1, 2, 3, they need a lower high right around here at the open. That means we need a bear bar taking out these lows, then I would sell into this area, but the buyers are waiting in this area. So it doesn't look all that great for bears, to be honest with you, but things can change. We don't have major news scheduled other than Dallas Fed Manufacturing Survey, and then at 10:30 a.m. Eastern Time, and then 3-month election and a 6-month election. There's nothing else today. Tomorrow, FOMC meeting begins in the morning, and we're going to have JOLTS, consumer confidence, all 10 o'clock, big news. And then Wednesday, we're going to have FOMC announcement at 2, and 2:30 the Fed chairman will speak and start his conference and Q&A session 2:30. Next 2 days, the ADP employment report comes up 8:15 on Wednesday. is productivity and cost, jobless claims, ISM manufacturing on Thursday, and then the employment situation on Friday, 8:30 on Friday. So tomorrow, this week is a big news. It's a Fed week, so you guys need to be super careful, okay? And let's see, I'm looking to see how I can become bullish here. But we haven't really trapped anybody yet, so we might need to move underneath the EMA. Or, I'm sorry, this is a moving average. I use a VWAP here. You don't need to use it. Now, we've been sideways, but in some kind of a wedge that is squeezing or contracting. Okay, here it is. But think of this as a trading range. And the heart of this trading range is really, so we were here, came back, broke out, came back in. So this area is important area. We're kind of below that. I'm trying to see if I can connect that bar 53. Yeah, still bullish. But the one thing that is I see right off the gates is look at the distance between the 5 EMA and the 1 hour EMA. There's not much of a distance there, so we're sideways. And market is trying to get back above this area. And if we do that, that means I'm going to be looking for some kind of a trap, get above, become bullish, and test this area. So I have an area I'm interested, and I'm going to look to see if I can be a seller there. But if we start to actually sell right now, we are going to break this area. Not only that area, we might even break this area. Look at this strong move down, okay? So if bears start to show up here and we stay below this area of interest type balance zone, we're going to target these lows. Think of this as a triangle. Breaking out these higher lows or prior lows become bar 53, prior days 55, or this low, all becomes target. Or you can, and here's your trend line. Market is, triangle inside a bigger wedge, and most likely market will try to break above it. If the bulls show up, they will try to break above this, and they're going to target and try this trend line and squeeze from above. But if the bears show up, I'm going to be targeting that low. And it could be super quick pullback since we're in a trading range lows. So we could come all the way down here. Now, for bulls, I have a pullback and target swing bulls. These are my swing targets. Especially this right here is my target. So if the bulls show up, I'm looking for, as long as this area is not broken with bear bars, then I have to find swing bear targets. Right now I'm more bullish than bearish, and I'm expecting this and that to be tested, especially here, this the second zone. So we're right at the apex of the triangle. Actually, we are closer to the upper trend line. For a quick bull target, but a good resistance, it's around 49.24, goes all the way to 26 area above. And market could accelerate there very quickly. Okay, so let's see if bulls can actually break this resistance. Just waiting for market to open. Less than 2 minutes left. Okay. Market is up, and we're right inside that balance zone once again. If we start to get bull bars, we have a, then I'm going to look for this trend line break. If we start to get bear bars, I'm going to look for market to test this area and a break below, possibly come down to here at the minimum. If this bar closes bullish, bulls will keep buying, and they're going to look for bull targets. They're going to try to look to break the Globex high. There's a gap here. They might be targeting this gap area. If that gap closes, we'll go even higher. So if this 15-minute bar closes bullish, bulls will buy more. Target will be around 49, 24 to 25, possibly, 25 area. That's a short-term target for bulls, and that's where some bears waiting. It's a strong resistance. They've sold there before. But we break above it, we could get up here. This is where I like to see bears actually try to swing. Here's the trend line test. Bulls need to break that trend line. Bar one is trying to close. Well, it did close, so it closed bullish, and then here we go. We have a gap open for bulls. It's already broken the trend line, so we have a they're trying to close the 15-minute bar strong, but the target is, like I said, 49, 24 to 25 area above. One thing I'm missing from this chart is my oops. Jeez. There we go. Okay, a little bit more room to the upside. And let's see if they can actually break this resistance. If they do break this resistance, don't get all that excited about it, because we will pull back. If we do break above 49.26, there's still room all the way up to 30, 32 area above, but sellers waiting there. Sellers could be waiting right here. It's the breakout of the trend line. It has to test some of these lower highs and then pull back and retest where it broke out, which is that trend line. But eventually, you see this gap right here, and there's also this ledge right there. We didn't really test one tick above that ledge. 80% of the time, we go and test the ledge, and then we go right back to it. So bulls will get their tests. This one failed, this bar from yesterday, which is Friday. So we're going to go higher. We're going to still go higher. So there's a small trading range within a larger trading range. Anybody who bought above bar one, they see a double bottom higher low neckline break. They want to test at least one tick above bar 27 low, 26, 27, 28 low. So they're going to keep pushing this higher, probably. We'll see. So the bulls need a second bull bar here, closing above its midpoint. Well, that is not good. So that's a doji, but probably is a follow-through bar. But that is, it doesn't give any confidence, right? That should have been a bull bar. So there's a little bit more room to the upside. When do I get not so excited about bulls? If they start to take out the 1475, 49.15 area with a bear bar, then I'm not going to expect bullishness, but we still have room to upside. So I don't need to worry about anything at the moment as far as the bears go. The trend line still holding, but the bears want to break the trend line, get back inside this tight trading range. It's not the most accurate location, but it is, give or take. I'm just trying to keep it as tight as possible. Bears want to break this, come all the way down here, but we already have 3 touches, and we also have a break from the above. If bears break 49.15 with a bear body, then I'd be more interested in is selling, but I'm not interested in all that. So I think this area is target as early as right there. We tested this line, but we didn't go 1 tick above. So you see how becomes above 23.75 becomes magnet in between these 2 price lines. And we break above it. That's where we're going to go and test. 15-minute bar. Bulls are trying to close it above its midpoint with a bull body, so they can continue to buy. Bears see a wedge top already, and they want to prevent the breakout from the Globex high. Might be too late for that, but we'll see. There's still 1 minute and 18 seconds for that bar to close, so the bulls need to hurry up and get it above the blue line and close a bull body. Then they could buy the pullback and continue to go higher. Stuck in a small trading range, but it's a bull flag after another bull flag. So bulls see a bigger bull flag, so they want to get back above this level probably, but they need to start closing better bull bars here. So if anybody who already bought and holding, that was the 1-to-1 and a pullback. If this is a swing, bulls might be looking for this target, but we need bull bars now. 15-minute bar closed bullish, not all that exciting, but still if bulls already bought the close, and you can see to them this is a breakout of the 15-minute opening range. So the problem here is that the bar is not all that wonderful. So that means they have to now show us that they can create a momentum. That means 15-minute bar needs to take over and fill the upper wick of prior 15-minute bar. And it's just such a big wick, and it's problematic, but still remember what happened here. Tight balance zone, we broke it. We're coming back and retest it. Now the question is, will it become a good support, or are we gonna we see here 1, 2, 3 wedge bear flag, and the bears will start closing below it, and we're gonna start to sell into these levels. So this right here is a decision making. So we're still slightly above. I don't want to say above, but we're trimming that trend line. So the bulls really need to just trap the bears here. Maybe at the EMA, maybe right here. But if they fail, we could find ourselves right down here super quick. So just be careful because of this 15-minute bar. Even though it's a breakout, there is a wedge. So here's your price action. And that's problematic. Probably. So there's a breakout bar here. They bought the pullback. But it's a way too deep. And that's why it's creating this lack of trust by bulls, but still it closed above. So this is a breakout, and the bulls want to get to, they already got to 233, but they want to get to this target. I'm just projecting is this trend trading range breakout to the upside. If they can get a grip here, we can still get to these targets about maybe even further. But that 15-minute pulled all the way back here. That's not good. But it found buyers there, and now they need to hold it. If they fail to hold, we could come down to these targets right there. So it has to hold. But you see how they make everybody jittery? It's like, is this gonna hold or is this not gonna hold? What is going on here? Like, these are all targets. I want at least this area to be tested. There you go. That's actually a small flag. Is bar 2 and 3 is a wedge channel, so the bulls are trying to get a breakout, but it's not yet determined. That means they have to actually take out the bar 2 high with a bull body, is buy the pullback, is and continue to go higher. So my target is 2575 area to 2850 or 2825 area above, if they can get this breakout right. So looking for bar 2 high to be tested. If the bull's able to close a bull bar above it, I'm going to look to buy the pullback, and I'm going to hold it the minimum 2550 or 2575, and then I'm going to look for follow through 2825 area. I use 4 bars. I look 4 bars. You can use 5 or 6, but I wouldn't go no more than that. Yet to have a bull bar close here. Small wedge pattern. We have 3 bars opened and closed above the trend line. That's something, but we now need a bull bar. Now this is the 20th minute since the breakout of the trend line. If bulls cannot get a grip in this 20 minutes, bears can take over, so watch out. Because I don't believe on the 5-minute chart, if in 20 minutes market is not capable of doing something in the same direction, I start to look for weakness, and that weakness to be exploited by the opposite side. So it's very important that this bar closes bullish for bulls, to say that at the end of the 20th minute, they've done something, but you see how they're struggling? So we're entering the last half of the 5-minute bar's longevity. So now is the time they either accelerate and get a bull bar or just exit out, so that we can get back into the apex of this triangle, and I can start to sell this thing all the way down to 1475, 15 area. This is just too much of indecision. All right, we're expecting bulls to do something here. Still bullish until otherwise. We can close a bull bar here. We're going to go and test 2825 to 2850, just so you know. But they have to get a grip. Here we go. Let's go. Decision would be wonderful. Let's go test this area at least. Okay, so I'm long, and I'm looking for a breakout of bar 2i and the close of a bull bar, if I can get it. What if we don't? What if we don't get it? Could this be a lower high suddenly? I doubt it. I think the bulls want to test at least as 23.75, one tick above at the minimum. But once we break this area, we're going to close this gap and we're going to get up to here. But just in case I was long, I took a little bit of scalp there in case we fail here. Holding like is 2 contracts. I want more out of this. I want at least 49.25 test. If we can then pull back and buy again and go into the 49.28.25, 28.50 area above. So higher time frame is I'm expecting bulls to do better. 30-minute closing bull bars means we test these highs and squeeze out. This is my first target. I'm more interested in the second target. It may not be a valid short. Look what happened. They came down and that trend line held. So to me, that's a micro wedge bull flag right there. Now the bulls, what happens with bull flags? How do you take profit with bull flags? Micro or macro? At the prior highs, you have to take profit. Because the pullback can invalidate the bull flag. So if that trend line breaks and we take out that bull body's lows with a bear bar, then the bears will want to come down here. Okay, that's too much. So that's how you know things are getting invalidated. So you have to really think of then first these bulls defending this area. You can't really exit out of your long, because this is where when you enter within the range of what seems like a bull flag, you're entering with quarter of your lot size, okay, trading lot size. When you get the breakout and a pullback, then you buy and add the rest. But everybody knows that at the prior highs, bull flags, machines will take profit and they will expect a pullback. And then if the pullback holds, then they will know that they can now enter with a much bigger lot and look for a breakout targets. So look what you're buying into. So that's why at that high of 2, I said we're going to test it, but I'm going to take profit. It's not guaranteed that we're going to break out of the high 2, bar 1, 2 high. So what happens is if we actually come down and break below the trend line, the question was, first you're going to see are the bears taking out the strong bull close lows and then bull bar close like bar 5, and then are they able to bring it to the neckline and close below that? Then we can still come down and sideways and up to make a bear flag and sell. You cannot sell that right away. You still have to wait for a pullback and some kind of a bear flag to form. So everything is steps. There's a process. So you can't just say, I'm selling this. Well, they could be coming down and running some skunk stops and then go only to back up high again. Then what? So look what's happening here. That bar 6 did not take out the 5 low, bar 5 low. Why? Because bulls will do everything to defend right there, because their stop might be here, which would be premature to put a stop underneath 4. Your stop should be down here, because this is the breakout of this small range. So better to put underneath 1 than put it underneath 4. So now what happened? If you were to sell and exit out, that bar 6 is right now what it seems like a profit-taking bar for bulls. So if the bulls now can take out the 2 and 6 high with a bull bar, that's great. I'll add more, what I scalped earlier. But if they fail and I see bear bars taken out the bar for low, that's the neckline, what I will do is as they run these stops, and I'm going to buy and I'm going to break even and I'm going to exit as it bounces up before it creates a bear flag. So I still don't need to panic. That's what I'm trying to explain. Exactly. How did I become this way? I mean, not that I'm a wonderful trader, but it's just, I think the number one thing that everyone needs to master is, or at least get a grip, it's the patience. You really need to understand the play. If you go to a soccer game, if you go to a football game or hockey or anything, okay, you don't know the rules. All you're going to do is drink beer and eat hot dogs if they serve any. Otherwise, you're going to be bored out of your mind going through, I don't know, dating websites. I've done it. They took me to a baseball game. Oh my gosh. I thought like somebody just killed me right here. What is this? Nobody's running. I need some people running and like hitting each other. I don't know. I need to see, referee calling cards, yellow or, red. I don't see any of this. So I died. But it's all my fault. I didn't study. I didn't do anything. I don't know the game. Everybody's like, seems to be having a great time. I don't understand what the heck is going on. That's the same thing with trading. But you learn the rules and everything's a fun, right? And you don't do the wrong thing. So I was drunk, by the way, right? Way before the game, and nobody told me the game was going to take like nearly 3 hours. What is going on? It's like you get a 45-minute, you get a break, and then you get back another 45. If you're lucky, you get the penalty, maybe like a 10, 20 minutes, and somebody scores a goal and call the day and go home. That's it. That's how a game should be. I'm sorry, guys. I've been living in the United States for, what is it now, like 27 years? I still don't know how baseball works. Oh, it's terrible. But it's all my fault. So the companies I used to work for, we had this tickets for the employees. So they would take us to the Yankee game, and I was like, I can't do this. So I would call sick that day. I'm not coming to the work. And they knew exactly what was going on. Oh my God. Anywho. Okay, so bears really need to take out the 5 low, take out the neckline, take out the trend line. Bears see a bear flag here. So they see this as a double top lower high. Okay, so it's accelerating. Now they're running some stops. There will be some bulls buying there to break even. By the way, it's news, so machines know some kind of a news came out. So I think the news is at 10:30, not 10 o'clock. So this is just machines reacting to 10 o'clock. Big bar, kind of surprising, and it's also took out the neckline. So now bears want to bear flag, but some bulls will buy here because it's a trading range, bear bar, so they see a limit order market, but they're trying to break even, and I had my break even. So I was long. I played that out step by step what I was going to do. I said, if this comes down and starts to jolt me, what am I going to do? I'm going to buy and I'm going to try to break even. If it closes higher, hey, that's great. I'll get back in again because I have there's a target here. But it's a limit order market trading at the moment, so I shouldn't be expecting any swing anymore until it sets up. So what did I do with that bar 8? I fixed it, and I now have like 0 loss. So Market wants to get back to the 5 high. That's where everybody's stuck now. And if they start to close bull bars above 5 high, then we're going to get a much better wedge bottom or micro double bottom bull flag. But R7 doesn't make it any wonderful for bulls, so bulls really need to show some teeth here and is close a bull bar. Not just here, but preferably one tick above bar 5 high. They do that. Many bulls who got stuck there will start to make money with their original contract. So the goal is to, let's not lose any money. Let's get the market up to the 5 close or one tick above. But if they don't see a bull bar closing there, then they could be inclined to exiting. Yes, that is your trading range. Bulls trying to go one tick above bar 5 high. Once they start to make money, they will not let go. So targets are above 25, 25, 50, 28, 25 is, we might even go a little bit higher, but sellers are there. So bulls are pushing. Better if they can close that bar bullish, then we're going to try to break this zone right there. That. Okay. Now, what do you have here at the open? Double top, double bottom. Failure for bulls, failure for bears, possible swing. If this bar 9 closes bullish, many bulls will jump in. Their stop will be underneath bar 8, and they will look for a 1-to-1 and 2-to-1 targets above. Here's a measured move target from Friday, because it seems like everybody entered but didn't get, they got the 1-to-1 but they didn't get their swing. So is this bar closes bullish, one tick above that bar, 9, bulls will start to have their buy stop orders. And then if we keep going higher, if those orders get activated, we're going to go higher. But if you park your order and you never get activated and suddenly bear bars start to stack, you have to exit out. But this bar closes bullish, then I'm going to be even adding more above it. Because failure of a failure could be a swing. Sure isn't all that wonderful. And there's this overhead resistance here. And they're struggling, but these are my targets on the 15-minute. So double top, double bottom. They have already entered here. So here's 2 consecutive bars. There are already buy stop orders above this 15-minute bar. They want, okay, you can do this is your conservative target, but if we start to activate those orders, that's going to be your target minimum. So I'm long. I'm still long, but I'm cautious. Target 25.50, 25.25. Could test 25.75. It'll take profit there, but then it's going to try to get follow through into 28.25. So I'm going to try to scalp around pit stop, is maybe one tick below. So that would be 24.75. I need a bull breakout bar here. We just tested the ledge, is one tick above, and that is the second part of ledge trading. Okay, is when the ledge is complete, it's not really complete. You also have to wait 80% probability to get back and test one tick above. So I said we're gonna test inside this area in between the 2 price points. I kind of delivered that, but I want more. I want bulls to actually demolish that 49.25. and get back in here. So I did say somewhere around 49.24 to 49.25 area is resistance, and we need to test, and that's why I keep saying there's room to the upside. It is buy stop orders on the 15-minute chart activated, and we just got my first target. That's the 24, but I want more. So better if the bulls can actually close this bar bullish, and that is basically low 1 failed, low 2, or you could say this is low 1, low 2 failed, and then the swing began. So failure over failure is a swing. So there's more room, and we might actually get to here or here. Still holding. I'm looking for reasons to hold it until I exhaust those reasons. I don't have a breakout bar here. Bar 9 is really weak, but we have a breakout open, or gap open, I should say. All right, let's not reinvent new, terms. Breakout open, gap open. So bar 10 gap, bar 9 gap. So you can see that there's pressure here. Is 25.25. I like to see one tick above, test it before coming down. But I want to see. So I have some scalp targets: 24.75, one tick below pit stop, 25.50, two tick above pit stop. So and then I have runners into 28.25. Furthermore, even 31 maybe, 49.31. But I need good bull close here. Bull flag is high 2 at the open. Bull's trying to get a good swing into high of yesterday. It is the kind of a trading range high, but I think it's just going to keep going higher. It wants to make a new high probably. Here's my next 15-minute target that was measured. Looking for follow through into 26, and then if we start to pull back and get another breakout, 31.25 is my target. There's nobody scheduled after me today. In case wondering what the schedule looks like. Tomorrow, however, is going to be Tim Stout and Brad Wolf. And then I come back on the 31st, the last day of January. And then is enrollment for February, month of February begins on Thursday. I don't know what the schedule looks like on Thursday, like for February. So, all right, let's see if we can get this target. $25. I'm one tick below that, but 25. I'm one tick below that, but there's a wedge here up on this, down this, up on this, down this, up. But I like to see bulls do better here. Okay, so I have a breakout bar from bar 2 high. I'm looking for follow through bulls here. Bar 10 is, well, okay, is, I think we just, I don't know what that is, but I think this is for these bears stuck here selling, is maybe underneath bar 6. They're getting a break even. That's the only thing I can think of. And then they see a wedge top here. So they want to come down to the 7 low and test it. Well, I did warn you about that wedge top, and I'm not very happy with this right now. So I'm going to have to think. Yeah, if this is accelerates, I just need to wait to see what the bears are going to do here. We close the bear bars, I'm exiting. But if we fail to take out the 7 low or 7 close, right now it's a break even for bears. And you can see we kind of stalled there, and I'm kind of disappointed with this, but it's not the end of it. So these bears need some kind of a relief, so they're getting that. But if it ends up is becoming just giving them break even, and then we could continue to go higher, that's great, but we have a wedge top here, and I'm not very happy with this. Bears want to swing this down and create a bear pressure. They are surely creating one, but okay, so here we go. So those bears are now making money. You may want to exit. If that body closes inside here, you're going to have to make a decision. And if this is too upsetting, there will be buyers again here, but these bears want to close this gap. Gaps can close quickly only if they can break below this trend line. So there will be buyers wanting to buy and break even, but this is too much of a surprise. So you have to make a decision, because we can quickly come down to 49.12. Market could also test 15, 49, 15, 14, 75. Some bulls are buying, is trying to prevent that body closing, but I think it's too late now. Bears want this close below 7 low. And those bears can bring market all the way down to 15.25 to 14.25. So I had to do some fixing here. I actually exited. I took my loss and reversed it, doubled the amount, and I took profits. So I'm back to being green again, but I sure give back a little bit, but not where I was before, but it's better than being red. So I can start to buy and sell again. My goal was I don't like this bar. This just rejected here. We couldn't get above that 49.25. I was really hoping that we would go at least one tick closer, maybe get to 25. I was one tick underneath 49.25, but you can see that it just failed. This is now becoming even a more strong trading range. Now look, this is also inverse cup and handle. So now bears can actually suddenly get us to the here, maybe even further down. So be careful there. I don't like this at all. So what happened is bears took out the stops, and I don't know what caused this. They are talking war. They're talking Jordan attack. I don't know. They're talking, apparently there's some kind of a hostage deal. I don't know if it has anything to do, but it will move the bars fast. So you have to make a decision. When I see a bar like this, I don't need to linger, because that's going to sell, especially if I see where bears sold or still were selling in stock. They will sell again. So I took profit here, but I still had a runner, and I wanted market to get to here. But I don't dictate where market goes. So I get something like this, I exit, and I sell because I measure for 9 to 10 points. And I said, you know what? I think I can sell into the 9 or 10 points with 2 times more than what I was stuck here, and make money. So I did. So I'm flat right now, and some bulls are buying because it's the trading range lows here. Bears want to close the gap, so they want the close of yesterday tested. But this is just too much back and forth. I'm going to look for clarity here. So here's what I plan on doing. If the bulls won't show up here, and they fail to bring us back to the bar 10, okay, and the bears break the 49.15, is I'm going to look for bears to get to the 10-point swing target, then take some profit there, and then keep selling, and I'm going to sell with them. But right now, it's very back and forth, and it is a potential of becoming some kind of a bear flag. So I'm flat right now, and I'm not going to do anything here. Now, anybody who's jolted enough here with still holding, they buy, okay, again, around 9 and 10 point. That should be 9. Yeah. So the market could still come down to the 10. Remember, 1030 is news, and then bounce. But some already are buying because they know these guys are going to take profit. There's still a bull gap here. Bears want to close this gap. So I don't know what will happen here, and it's news. I just put all of my accounts into a good place where I'm green on all of them. I'm just not going to care for 1030 release and do anything here. I need clarity. I need bears to break 49.15, move underneath, and show me if they want to sell. I will sell with them. But we're stuck inside the opening range again. So one thing that I also see that the bears are failing, they have not closed a bear body underneath bar 1 low. So that's good for the bulls, but only because they're buying and they're trying to break even. So I'm not also going to buy this because this is where bulls are trying to fix. But anybody who bought here, their stops are down here. They have a white stop, and they could be still swinging higher. So this won't jolt many bulls who are swinging higher to this target. So those bulls are buying, like I said, they're buying. I made a decision to sell because I already fixed something here. I just didn't want to fix again. I exited, I sold and made my money back. And these bulls are buying, and they're trying to get to a good place, 50% of this expanding triangle's apex area. So that's an 80% probability of breaking even, the average price. And if that's good enough for them, this could still sell. But if they want more, then they're going to have to close a strong bull bar, open a new one, and get back to these highs again. They show me that clarity, I'll buy again, but at this point, bears got a chance here. That kind of a bear bar will probably going to look for a leg 1 and leg 2 down, or leg 2 and leg 3 down, because this is the leg 1. So I also don't want to buy here into this fix it event, and I don't know if it's going to go higher. This is where I'm neutral, and this is where I stay flat. What the bulls trying to do here is, remember what I said, is they're probably trying to squeeze the bears out of the market. But this could be a bear flag also. So 1, 2, 3, 1, 2, 3. So the bears need a lower high and then try to sell again. They're deciding. Market is not all that bearish, but okay, you see what just happened there? If I were to buy right there, I would have been upset because I've seen this enough to not to do anything. Just sometimes you just gotta rely on your experience and stay flat as long as you can. But that target met? I said it's a ledge test, 80%, so this job well done. I got my target, no bull bars closing above. I can't just be stubborn sitting here waiting for bulls to deliver, right? So now we have cup here, deep handle, and the market is trying to get to the 1175. So bears just got a full 10-point swing here. They might get a lot more than this. They could accelerate and test 1125 to 1025. 10-point bears took profit there. That's why we got that lower wick. But they could want more and bring market into 1125 to 1025 area. But we need a bear close right here, right now. Take out the 14.15 with a bear body. Then we accelerate into 1225 at the minimum. But they need to close a bear bar. If they fail, we're going to bounce again bullish. Bears want more out of this, but it's support. This is support. The trend line support. This right here is support. But this is a very strong bear bar, so they want to break this support. So they want to follow through into the 1 hour EMA. That's also support, which is right here. We're there. You can see the support. But they want to break below so they can get in between the 20 EMA and the 50 EMA on the hourly chart. So it seems logical for market to come into this area on the Globex chart, which is midnight open and is US new session and new day, I should say, and Asia mid, which is this yellow line. So I need a bear body here for bears. And bar that actually takes out the lower wick of bar 13 would hint a momentum for bears. That's the measured move for bears. 1175, possibly. They might want that. So 1175, 1150. Let's see if we can actually test 1150 and bounce. But it's just support, still holding. There's a better support down here. We closed the gap, the opening gap. I didn't buy this. It's still a bounce is from the pit stop and also the 10-point. Now, can it get very bullish? Well, there's a gap here. Bears want a double top, is micro double top of some sort with bar 13 high, and they want to keep this gap open. So if this gap closes and the bulls actually start to close bull bars, I'd be happy to buy it, but I'm not interested at this point. I want to sell, but I need bear bars closing near 1325 or towards the low of bar 13. So there's nothing there. It's a 10-point plus the 49.15 area, plus the support, plus the trend line. So these bears started to take and accelerate the profit taken there. Like I said, I needed a bear bar closing below 49.15 for me to sell it. I just couldn't sell it. It didn't hit my criteria, so my rule. And so what do I do? Nothing. Because there's a gap here and the bears can sell. They want a double top with 13 high or somewhere is trap the bulls somewhere in that gap area. If bulls start to close the gap and take out the 49.23 with a bull body, I could look into buying again, but it's just very difficult right now. It's right now buy low, scalp a little, and see if they can hold it all the way up here. But this makes me nervous. So it seems like this area is attracting price once again. So you're in a scalp mode here. this doesn't look all that great. But if the bulls finally get back up here and break above, then I'm gonna say, okay, so this is a cup and this is a deep pullback handle, and we can actually accelerate up and we can double this range to the upside. But I don't know. All I know is that there is a bear gap bar there, and I don't think the bears are gonna let go that easily. You got IOI, yep. So you have a breakout mode, 12, 13, and 14. But it is overlapping bars, limit order inside a limit order. Bears want double top there, so they want to close another bear bar. They're selling a strong bull bar close, so you can see that this is a scalp mode. If this bar closes bullish, that's a whole different story. That means bears sold here, scalp but not able to close a strong bear bar. No one may sell, and then we could go higher. So this is right now is market is deciding. Bulls want a 10-point here. They want to go test 2275 is their 10-point. I'm flat here. I don't care to do anything. But if you're inclined to do anything, you're basically selling a strong close or above inside bar and scalping, because bears can bring market down to the 13 low, but you don't know that because you're stuck inside bar 13. So bears selling and scalping, but they will get more excited if they can close below the midpoint of bar 13. Then the low of 13 is going to be their target. See what just happened there? Would you have both this bar? I didn't buy it. 14. It is high 1, high 2 if you actually count it, but it's also dangerous because it's also double top bear flag possibly. So bears want more. They want is possible the measured move 1175. But they need to close this bar on its low. All right, about 15 seconds left. Let's see if they can turn this into a bear flag. And why is this happening? Why are we stuck in this? I said this earlier, and I pointed out to you on the 5-minute chart. What is happening here? Why are we stuck in this 10-point range, maybe a little larger? Who is going to tell me exactly the clearest sign that's on the chart right now? Why is this happening? No. I mean, you can find fair price almost everywhere on this chart. That's not the answer. No, not the trap traders. Take a look at the positioning of 2 moving averages on the 5-minute chart. It's a tight, area, and they're going parallel to one another. A little bit inclined to the upside, but this is a trading range trading. So what happens with trading range trading? You look for, above the EMA, 5-minute EMA, you look for failures and you want to sell. Below the EMA, you look for failures and you want to buy. You look for bear failures and you want to buy. Like they started to buy these bear bars and they started to sell bull bars, right? So you're getting failures. So we're stuck in a trading range. So therefore it's scalp mode. So this is a double top above EMA bear flag. Bar 15 closed at its midpoint. And if now 16 closes bearish, we're going to get a bear bar strong moving towards this level. But most likely, bulls will look to buy there. So, yeah, it's tough. This is your triangle now. I'm going to remove that. So, clear there. Bears want to test down here, but they need to close this bar bearish. If they fail, that's a whole different story. Right now, they're trying to close a bear bar. But it's the trading range trading. So you have a scalp, not a swing. Bears trying to close a bear bar is below the midpoint of outside bar 13. If they can't close it, they're going to come down and test the 1450, 1425 area. They close another bear bar, then they will go for a 13 low. But that doesn't mean they're going to get a clean breakout there. So if we start to get a strong bear bar, bulls will try to buy underneath the moving average to bet against any strong close as long as these moving averages go parallel to one another. So the bar 13 is what I call is a mother bar. It's IOI, so it's a trading range. What the market is doing is telling you, don't try to swing and look for a breakout. It's telling you that inside bar means triangle. So triangle means we're going to go test the high and the low and the low and the high. So we're stuck in this trading range until we trap the bulls and the bears twice before looking for a final breakout. So look, bears trap the bulls above the inside bar and towards the high of bar 13. Now the bulls will want to trap the bears trying to sell and around low of 13. So this presents scalping, not swing. I'm not interested in selling anything until I really see a good bear body close. First, 49.15. Then I'm still looking for trap, bulls wanting to trap is here. But if you do sell, you still have to scalp around here. Bears want to test 13 low, but they have to close a bear bar here. I did say earlier, bears will test the 49.50s or 25 area. That's 25 right there. 14.25 or 14.50, which we did, but bears want more. So there is not a strong bear body here, okay, to buy just yet. So they probably want this leg 1 pullback, leg 2 down, further into this measured move. We haven't really trapped any bears here. All I know that they can still bring market down to 1350, 49, 1350, the 1275, 1250 area. I'm still flat. It's just, I don't like this price action. Bulls want a high 2 here, and failure of a second leg with bears under the EMA. Bar 17 is really decent close, but if you buy here, I'm worried that it could still come down. So there's high 1. They're looking for high 2 in a tight trading range. I will only consider buying if bulls start to close above 49.19. I'm not interested in buying here above 17. but it is high too already. 18 went above 17. I don't like to buy in an environment like this when bears are trying to get a second leg down. Maybe even third leg now, because 18 went above 17. So you see what's going on there? This is why I said I'm not buying this. We need to trap the bears, and this isn't a good place to trap. Trapping will happen towards the low of 13, around 1350 to 1175 area. So bears want more out of this. You can't, and there's no decent bear bar strongly closing like this, for us to start buying. Remember, you got two parallel lines, okay? You want to see a strong bear bar, then you can buy, okay? None of this are okay. So you just have to be patient. Because remember I said, now that we failed to get above this area, but we completed the mission, I close, just get rid of them, so I don't like too many things on the chart. This is a strong bear bar that will want a couple of legs down. And I said they're going to break the support. They want this area. So you can't really buy, okay? You just have to wait for bears to make some money. That still is small measured move from this failed breakout. There's, however, is leg 1, pull back, leg 2, pull back, and technically this bar 18 is a pullback, and leg 3 for bears. Why are you surprised that, okay, let's dig this because I'm curious why he's also suddenly surprised. So member on Discord says, I'm surprised you don't short below bar 18 if closes at lows. What's your thinking there? Why would I short bar 18 if it's kind of a third leg already and you're in a trading range? Have you seen me do something before that I don't remember? I don't know. I'm not going to dig in deeper here, but I'm kind of intrigued to hear. I'm not making fun of you or anything. Maybe you saw something before that I did? No. First of all, if I'm going to sell, I want to break out from bar 13 low. Okay, I don't want to sell into this bull trap zone. Bulls are waiting to trap the bears, or I should say bear trap zone. When I say bear traps, that's not bear setting traps. That's bulls setting traps to trap the bears. New traders generally confuse the two. I did. Somebody keeps saying bear trap. How's that a bear trap? Oh, and then I realized what the terminology was. So there's still a target here. Yes, they can sell, but there's not much of a room there. And we just test these inside the trap zone of this bar 13 range. There are buyers waiting here. It could still come down more towards 1175. So the target for bears is 1125 to 1025. I just don't want to sell into this. You can, but you have to take profit. I have a trading range here and trading range, okay, midpoint. And if you divide it into 3 sections, right? So that's the whole thing. Well, that doesn't really, let me do this better way here. So here is trading range. Look where we are, right? So if I sell this, I'm selling into a buy zone. Selling into a buy zone. Also trading range. If I sell this, I'm selling into a buy zone. Now, if they break it, sure, we might be able to get some kind of attraction, but I need to see it, right? So that's not easy. See what's happening with bar 8, bar 19? They're trying to trap the bulls. So that means there are always buy orders, machines lace this area. And in fact, this right here, from here to here is a trap zone. Just like from here to here is a trap zone. First trap is bears trap the bulls. You can't buy above this bar, thinking that's a high too. You cannot also sell in here because that is the first trap. So there is no breakout. You just have to wait. That's the name of the game. One side has to try twice to break out. If they fail, they can even trap for the second time and start to swing. So this is the first try for bears to break the 13 low. They're going to try again. They might test the lower trap zone or might even get this target, but it could suddenly close inside the range of 13. That's the second try. Bears failed and the bulls can take over. So you see why I didn't want to sell underneath 18? I want to see a breakout from 13 low with a bear body. Then I would look for a pullback and then sell into here, and these would be my targets. But that hasn't set up yet, so I'm not interested. I have to give room for bulls to try trapping at least. They may fail, but that is they just did exactly what I said they would do. So they did that. Now, how do I know that? I look at charts in my spare time, and I like to see what's happening. It kind of glares at you. When you look at something long enough, you start to tell there's something keeps happening all the time. Like, look at this here. It's a variation of a mother bar, except that this inside bar actually exited a little bit here, went one tick below. But some machines will call that an inside bar, and that's a trap right here. But I stick to the rules. I want a perfect outside-inside combination, so I don't use that. There is this one. Outside, inside, finally a breakout, pullback. You sell that breakout into support. Pullback, you're going to have to sell the pullback again. Okay? And what else is there? Examples. Like this. That's an outside, inside. What happened if you sold this? What happened? They trapped you and they had a swing. Look, outside. That's better. Forget this combo. You're still in this one. Look, if you buy this, there are sellers waiting above. They send you back down. Can you sell this? No. This is the first time we're testing this outside bar 55's low. Who is there? Who's there waiting? Bulls are waiting to trap. But look, if you actually, here, let me get rid of this. If you actually measure bar 55, either you use this template, lower third, buyers waiting. But that's not the template I use. But you can make things easy. You don't have to measure anything. Use that one. All right, so here we go. Hold on. Let me delete some things here. So here we go. Right. I measured a bar 55 range, extreme to extreme. You sell here is thinking it's going to come down and test one of these bars or lows. Where's the trap? When is bar 61 is the first time we're testing the trap zone. Limit bulls are waiting there. They put their orders and then they buy. They want to test back up here and get a breakout. Nice breakout. We already are above the first shallow target, so we're going to go to the next one, probably a measured move. You have to take profit there. There was a discussion last night on my Discord. Someone was arguing randomly we could just hit any of it. There's nothing random. If you think you're long, what are you going to do if you don't measure? You're going to look for a market to close this gap, and you'll be still in your long when they're coming down, and you'll be losing half of what you made, maybe more, okay, when you're supposed to scalp there. That's not trading. That's just, something happened. I have to give back everything. Market is reversing a lot today. Ooh, it's choppy market. No, you're just not knowing what you're supposed to do, and you're not taking profit when everybody else is. The machines are taking profit. Remember, you're trading with the machines. Machines are a lot more smarter than you are. Look at this trap zone. Look, first trap. They trapped. Look, it went inside one tick. Second trap is they try to sell twice. Now we're breaching above the trap zone. Therefore, we're going to either go to these targets or we're going to get a 1-to-1, and we have a breakout. So if you're not measuring, you're doing half the work, but you're not doing all the work that you're supposed to do as a trader. You don't know where to take profit. That's half the equation of trading. Then you don't know what you're doing. So that was a discussion last night. You could be a great trader, but something like this happens and takes away all of your profits, and I get the scalp there and you don't. I don't like to compare who's a better trader here, but I will feel bad for you that you lost all of that. Might as well measure the way that some machines measure. And now, no one taught me this. I had to spend hours after watching Al Brooks's bonus videos, 2 series. He's got more videos actually in the course. IOI, OII, OO is, why does Al mention these bars? There's something important about those bars. If it's important enough for him to pay attention, this was years ago. Bonus videos weren't even there. Those bonus videos, 2 of them actually, last year was posted. I took his method and I started applying. I started throwing, I'm going to measure that range because it is a range. He's saying this is an outside bar and you got an II. What is he saying? You're stuck in something and it's not going to break out easily. That's what he's saying. Watch the videos. So I started measuring because this is a trading range after all. What does a trading range do? It just goes up and comes down, goes back in, finally makes a decision, gives you a bear bar taking out that low, then you sell the pullback, right? So those levels help me see where the traps are, and I give these guys 2-time trap, and if they fail, I just take my trade. Anyway, this is no more because we took out that low. Today's not easy. We've got a wedge at the above the EMA. I'm gonna see if I can pull some tight trading range. Look at this one. Came down underneath the EMA, then starts to swing. We got another double bottom. So we have a trading range. Look at this. It's going double top, double bottom, wedge bottom, 1, 2, 3. So we're going back to this area again. Maybe to test the high of 13 this time. Make a double top, we come back down. Maybe we already made that double bottom. We could actually go and test the high like this. We do have a double top here. So you see that double top with 13 and 15? That could be that. And then we have a double bottom. So we could get a slew of bull bars like here. Leg 1, pull back leg 2, only to test the high, and then come back down again to this area and then go sideways. So this is basically stuck in some kind of a 10, 11 point trading range. It's telling you all you can do is scalp or swing 10 points or scalp within the 10 points. So you have minimum 5 point allowance for scalp. That's 3. If you measure from bar 19 high, that's your 5. So you want market to go 1 tick above 5 points to give you a full 5 points if you buy right now. So that's trading range. So when does the breakout happen? You have to look for 3 legs for both sides. That's what I look for. Like this, leg 1, leg 2, leg 3. This is your trading range. Find the midpoint of your trading range. Leg 1, leg 2, leg 3. It goes back and tests the 50 and it starts to swing. Except it ran out of time, but it made a new low. So that's this part of the swing. Probably the next day will gap down and then go back up. And it's going to try to sell again, and then it might start to reverse back. This right here is this section. Part 15 is my favorite section. Why? Because it's kind of telling you where it's going to reverse, right? It's telling you what the day is going to look like, majority. And I just found it right there. That seems like the chart so far. Okay. What did I say about not buying here and looking for a better bear bar? Now, take a look at bar 18, and you tell me if that bar is a much better close and the bulls finally showed up. So they're looking for a 5-point minimum out of this and a 10-point swing possibly. So that's 9. We could actually get there. So I'll just put there. So if you buy, you see, doctor, why I didn't want to sell. What happened there? We just trapped underneath that bar 13 range, and the bulls showed up. So if you should have been surprised if I were to sell anything there. Then you should have said to me, I'm surprised you sold into a trap zone, Rose. What's up with that? Then I would have said, you know what? You caught me. I made a mistake, but I didn't. So now you know. There's no surprises until, unless if you know what the market is going to do. So that's the only way to figure that out ahead of time, ahead of everybody else. Okay. Rose, just curious, if 22 closes like 11, then we just say it is a short. Is 22 closes like 11? Well, you have a micro double top. Bear flag failed. Why do the bear flags fail? Why did this bear flag fail? And we're just reversing. Because you have a trading range. Flags will fail. Bear flags will fail at the bottom of a trading range. Bull flags will fail at the top of a trading range. It's in that I laid out the rules. It's in this. Hold on. If you can have some time today, go type encyclopedia here. Find us using the Brooks Encyclopedia chart patterns. Scroll down. This, I laid out the rules on how to trade trading ranges, tight trading ranges, or trading range days. Pretty much everything's in there. So just, and part of the rules is that you look for failures of breakouts, and that generally happens with a bear flag failure. So that's one of the reasons also why it just reversed back up. So can it close like bar 11? Bar 11 is a very strong bear bar. I don't know. Right now you have 3 bull bars. What does 3 bull bars mean? If they're, look at them, by the close. Bar 20 actually gapped up. So what do you expect there? You expect a leg and a possible another leg for bulls. So you don't sit there and expect bar 11 to happen. You simply buy, because that's momentum is looking for probably another leg up, even if it's a small one. So you're going to get a follow through continuation. And to learn about all of that is you have to watch is this right here. Watch starting with 50A, okay? Starting with 50A, watch these videos. You see something like this with a bears failing with that bear flag, and you suddenly get this gap up and 3 bull bars. You're going to buy, or you're going to expect at least another small leg up. So 22, strong close. So that's a pullback. Is bulls probably want to go a little bit higher, but you're also testing the 50% of this trading range. So they're taking profit here. That's the reason why you're getting that bar. So you should be measuring this, just roughly this trading range. Look where we are at the 50%. So if anyone's stuck here, bulls, they bought once, didn't get anything. If they buy again, they get their 80% break even, 80% probability. But they want follow through. Now, this is a leg, that's a pullback, but that pullback is created with profit taken at the midpoint of this trading range. I'm not having this into consideration. I'm looking at part of yesterday's trading range and today's price action together. So this is the trading range I'm basing my reading on. Now, can we get a bar like this? Well, let's take a look. I don't know. Look what happened here. We went to the 50% of this trading range, and we're getting a pullback. But that doesn't mean, right, so give or take 50%. We can get another bear bar, but if there are buyers here, we'll go right back up again. So you're in a trading range, you're approaching the midpoint, you better take profit there. Or here's another way to do this. Here's is divided into 3 sections. I hope you marked it because I'm going to get rid of it. Here's my trading range, right? Roughly, this is the trading range I'm interested in. You can use this level too. We found buyers look where we are, exactly 50%. So if we start to close bull bars above that line, that's the boundary line. I'll be taking profit, and I'm going to look for bulls to actually reach here. Boundary line, and then the midpoint of the upper third. So if you take this entire thing into consideration. Look at that right there. Buyers showed up in the lower third. So you might even, yeah, that's it. We just tested the boundary line. You see why they're taking profit there? And they just tested inside the upper third briefly. So they have every right to scalp. What happens if bears close below this line right there? Then they're going to try to bring the market down here. However, if that fails and we close a bull bar, then we're going to go and test there. Market wants to test these highs, I think. So, difficult day, but you can still find your way around if you can see what's going on. It still is parallel moving averages. You still have to pay attention to which bars that the bulls are utilizing. Is bar 18 was buy to close. Now this is slightly more bullish than bearish. Why is that? Because 5-minute moving average is above the 1-hour moving average. That makes us slightly more bullish than bearish. But it's just, this is still possibly a wedge bear flag, lower high. Bears are still trying to come in here. Okay. So what does this mean is you're in a scalp mode. So you have limited time to scalp or trade. And if you throw these little guidelines, as Elle explained to us, then you can actually say, okay, I don't really need to count points. I can actually tell where I need to take profit. So just trying to make it easier for you all. Or you can also, here's another way. Here's a trading range for you. Or you could do this. Whatever fits better. So that's a much better fit. Okay? I'm getting every line touching. So this is a trending trading range with bears not able to take out the lower trend line of the channel. Where are we? We're in the lower buffer inside. That's the outside lower buffer. So if they actually break this line, this is where the bulls are going to bring the market back up to. Only if they break this line. So basically what I've done is I took Elle's 3-part trading range theory and I applied a tactical, view right here. So basically I'm using it in an angled channel trading range, and I'm using this area as the extreme buy zone, and I'm looking for bulls to swing into here only if they break. So if I buy here, I have to take profit here, scalp a little, and leave a runner to go in here. Okay. I'm using the Fibonacci retracement tool, and I'm adding these. That's going to look weird, but just to show you, just take a screenshot of this. This is the, there we go. This is the channel with breakouts levels. Okay. So take a screenshot. That's what I'm using. Done. Hope you took a shot right there. All right. Bulls are going for 5 points, so that means they have to test 525. is they have to test 49.21 to scalp 5 point out of this by entering above bar 19. I can share it again. I'll post a screenshot after the session, so if anybody missed it. Okay, so that's, we measure from here. We need to test that line to get a solid 5 points. We tested one tick under. We tested one tick under. It is a solid 1 point, but I mean solid 5 point, but you need extra tick to cover the commissions, right? Or give everybody a 5 point. So chances are 49.21 we could still test. But if anybody entered one tick above, that's not actually accurate. So that would be 15.75. So you would be entering 16.5. So you would be entering 16. Okay. Then it needs to test 21.25. This is how L would measure, probably, if it's going for a 5 point there. I, on the other hand, measure from here. I'm looking for a bull body closing above this. And if this body closes like that, then the bulls will try to go at the minimum 9 to 10 points, so 1 point below. So if you actually measure 9, it could be a couple of ticks above 5 point scalp, but I get the 10, so I'm gonna look to see if the bulls can get a 10 point there. But we don't have a confirmation that this can continue to go higher. So far, so good. Bulls want actually 22.25, possibly. Not just a 21.25. But 21.25 is a good 5 point, an extra tick. Market could be sideways today, most of the day. One more tick, and that's going to be 21, but we need 2 more ticks. So we need 21.25 test. Everybody's holding their breath and like, let's get that. Almost there. Okay, if you do close, if you measure from there, then you got your target, then scalp out. And that you could say this is the reason why we're stalling here, because machines are taking profit who measured from the close of 19. I want to argue with you. See why they're struggling there. If you are measuring from the close, sure, but you know, I'm just gonna measure from here. There's this is the second leg up for bulls, and they know that there are sellers here. Because of that, gap bar 11. So there's a couple of things happening here. It's the resistance. And also look where we are. We're testing the 13 high, which I said that we will, but the trap zone continues a little bit higher. So trap zone is the high of the trap zone above bar 13 is exactly 21.25. So we have been closing bull bars. So this is why I'm also expecting 21.25. I just got my target. So you can all take a deep breath now and scalp here and leave a runner. See if we can actually get to my 10 points. So thank you very much. So I handsomely scalped there, but I need a bull bar closing above. So now everybody's going to take profit there in order to get to here. We could get to the 10 point and then start to come down. But I took profit anyway. Anyway, I'm going to turn on the questionnaire box on GoToMeeting. Be happy to answer some of your questions before I end the session. So we got that 5 point solid. A little bit more room to upside, perhaps. Tough day today, but more bullish than bearish. Yeah, I saw that I waited for a second bar. I actually went long with bar is 20 there because it's a decent close. Second bar, that's a trap, and it's a gap open. So I'm expecting leg to go up and a pullback and a second leg. And I actually said that several times, why bulls would buy here, other than being a trap at the low of 13. They're now getting ready to swing it. Sometimes there are correlations between oil and ES. Most of the time, they say that there is none, but sometimes there is. Now, what constitutes that? I have no idea. You know, I've never looked into fundamentals with ES, but if there's any OPEC meeting, pandemic, obviously, the oil shortages, products not being delivered, housing markets, building market, and all those reports. It could play a role. It's just that I'm just too lazy to figure out what that really is because I don't really care. I'm just going to trade oil for, the price action that it shows me. So here we go. The oil here. All right. So a similar situation, but we moved underneath the EMA. So you have I'm looking for this as my measured move, and I get it. Some will use that high, but either or, you're getting your measured move. Okay, I just don't care if there's any correlation. So there's also a wedge bear flag here and a lower high. So here is your final last. Use that. Market oil wants to come down here and to these targets, but first they need to show me they can take out these lows. So in order for this bear flag to commence and start selling, I need this area to be taken out with bear bars. And this is where you take profit because it could bounce and not come back. But it bounces and uses that 1 hour EMA as resistance, then you're going to take profit right there. So these are the targets for oil. Next question. Rose, can you show us how you created this sectional trading range grid? I'm figuring you created it with the fib tracement. Yes. Oh, I thought you saw that. Okay. So here's a fib. So basically I'm using Fibonacci retracement. Okay, so I'll do this from step 1. Okay. Double click is open up the templates. You see these levels? Click is on there. These are your levels. But that's really not the level. Sorry, I'm showing you a different template. I have a template already created, named it TR3 levels. Now click here. There are 9 levels. 0 is, where's 100? 0, 100. I'm not using 21. Remove that. 3350 is 66. That's the inside. Then I've divided 33 into 2, so that's 17. And then 83 added 80 minus 100 minus 17, 83. Okay, so that makes up. Get rid of that. You don't need that. So this is all you need. 1, 2, 3, 4, 5, 6, 7 layers. Apply is, let me save that. That's it. So buy zone, sell zone, do nothing zone. We go there, probably sellers. We come here, we could bounce. We go there, come down, we could go. Then we could start to sell again. We probably sold there, bought again. And these are the mid-range of each stacked 3 parts. Kind of important because they are trading ranges on their own. I call these boundary lines of each stacked level. These are your parts. These are boundary lines. And then in between. So if I'm buying here, market comes down, moves under, and then moves above, closes a bull bar, I'm buying. I will take profit there. And if I see bull bars closing, I'm going to hold and I will scalp here. And that's where I'm going to exit because it can pull back here. Then if I see bulls going above, I will buy and scalp and hold until here and then exit. Next. Okay. What is that? Wait, I think I missed a question there. Hang on. Brad says he doesn't do great on strong trend days. He prefers trading range days. Do you have a preference? Well, Brad is all around a great trader. So he says that because he's not the only one who doesn't do well on trend days. Because market, the reason why he says that, and I'm going to try to speak on behalf of Brad, and Brad can come in and yell at me if he wants. And, he's more than welcome to do so because I'm kind of speaking on behalf of him. Because S&P is known for its trading range trading. But not just S&P, any market, 80 to 90% of the time, it's in some kind of trading range. And 10% of the time, markets will give you a breakout. Okay, so automatically, when he says he does better in and he prefers trading range trading, because it's so easy to navigate. Okay, he's counting legs. It's so easy to count legs in some kind of, look left, there's some kind of a new high. Okay, so there was a high there, and there's a low here, right? So market maybe, started trading like this. So there is, from high to low, there is the midpoint. So if market made 3 legs up, chances are it's going to come back to that midpoint. Might even sell with a second leg and then trap and start to go. Maybe this is the actual first leg, second leg, pull back, and a third leg, and we test the highs. And he knows if this is a complex leg 1, this is leg 2, and he's buying into leg 3, chances are he's scaled in somewhere with that pullback, knowing that this is trap, and he's looking for continuation. But I doubt that he would hold it, because he knows that this is a trading range highs. He will take profit there. He's got something as a guideline to go by. And when he actually goes over the trading range, is part of the course, he'll go deep into this discussion, I'm sure. So it's very easy for him is to decide, where the resistance is. So when he's buying into it, he needs to take profit. But on a trend day, so let's find a trend day, we're automatically programmed. I'm looking like here. We're automatically programmed to look left and find some resistance and expect market to reverse, okay? So we start to take profit. And then we realize that a good trader will not sell. This is profit taking. If he's selling, he either didn't enter this long, he's trying to take, maybe he's trading the ES chart, or I'm sorry, he's trading the MES chart, and swing trading is, and on the ES charts, he's actually selling. You can do this, by the way. But you cannot buy and sell micros is on both, on both micro charts with the same broker. That's hedging. They won't allow it. If they flag you in their system, they can close your accounts. Now or you can do the same thing. Maybe you're with one broker and you're with another broker. You open the charts and both are MES. Okay? And he sees this, he's going to sell this, but he will scalp there and expect a failure and continue to go higher. So there's a little bit of scalp there, but really this is a swing. Now, when you get these deep pullbacks like this with multiple bars, it throws you off, because look how much it actually sold from here to here. It's more than 10 points, but you should be measuring from here. So now you made 9 points. 9 points can create, okay, a trend to the other side. So machines know that. But then machines start to also calculate how much the market moved. It moved more than 6 points and closed the bull bar. Now, as it comes down, as long as it doesn't take out this low, now the trend that was bullish before resumes, okay, to the upside. So this is bullish. So you have to do these calculations to figure out, this move down is nothing but a profit taking, or is it going to start a reversal and go right into here? It doesn't. We have a higher low. This is not a, here, measure from here. This is not a 9-point profit taking. It went more than 6 points, but look where the bar closed. That's 375. Is this a trend starting to go down or create a swing for bears? No, no. So therefore, if he exited this trend swing, he'll probably to jump right back in above 33 and go with another 10, 15, 20 points. A good trader would calculate it and see what the machines are doing, what kind of conditions they're creating in the market. Machines dictate how the market moves. We don't. So a good trader that he is, he then looks at this as a small trading range, and he sees a breakout. He'll probably going to now look for minimum double the size of this little trading range, and then perhaps this leg up projected. So he's going to keep adding with the good closes. Now, he's not telling you that is not a good trend trader. He's telling you that it is difficult because many people struggle with this. We're programmed for reversals because we expect market to always get back into some trading range, okay? But it shows you the signs. Like this is the prior trading range that lasted more than 10 bars, right? In fact, it lasted 14 bars and broke out. So if it's coming down here, but not able to go into the 50% and reversing back up, market is telling you, hey, you're in a trend day. You should be buying. Even if you're late to enter, enter now. You're going to get this leg projected to upside minimum. So, but you didn't ask for this. I just went off tangents here. Is trying to defend my colleague because I know he's a good trader and he can trade any market. But to answer your question, do I have a favorite? Yeah, trading ranges are my favorite, hence why I volunteered to make that video for the how to read the encyclopedia patterns charts. I do enjoy it, but I also enjoy a good trend day. But it took me a while. One time I started, I think it was like early days of me joining the Brooks trading range, Brooks trading room as a member, and I'm trying to get to know Al, his price action reading and all that, and it was a day of like setting and forget it, like trend from the open, and it kept gapping up and gapping up above the EMA. It's one of those days. It gapped up like 30, 40 bars, and I was already stuck. I was already stuck, and I'm selling every high, trying to figure out. And I remember Elle saying, this is one of those days can ruin your account, that if you keep selling the highs and this. And I said, I just can't do this. So I took the loss, and it wasn't several $1,000s. I remember this. And I said, I'm trying to trade an RTA chart that I don't trade most often. I used to trade 4,000 tick charts. And I'm trying to make the switch to an RTH 5-minute chart. Like I'm fish out of water, trying to figure out what the heck is happening. I've never lost this much money. Is this a trade room legit? So I'm looking for, put the blame on somebody, and that's L. Then I started listening to him and said, wait a minute, he's telling me if I hold on to this and keep selling, I'm going to be losing. So I reversed it. Whatever the amount of contracts, I kept buying the good bull bars and good bull bars. I doubled that day. Whatever lost, I doubled it green. And then I went in and I started studying days like that. And I printed those charts, and I have this folder, and there's a section with printed charts that gapping up above the EMA or high to buy, small wedge breakouts or double bottom at the open, whatever. So I started studying and learning. Now I love those days. Like you cannot go wrong. You just have to study, and but you also have to expect trading range days are dominant in the markets. So like for example, is we reach my 10 points. Look, 10 points and no bull body closing above. Everybody's taking profit. So I was right with that target. So hopefully you guys actually taking some profit. Now this is a trading range, and this is a leg in a trading range. You know what happens to the legs in trading ranges, right? Is they reverse. So anyway, so to answer the question, I do like the trading ranges because it gives you a 10-point minimum. You're going to get it. And I just proved my point. Whether you measure from the pivot or above. Now let's measure and see how much they got. If it was one tick above, and that's not 10 points. So that's now pull back, leg one, pull back, leg two, pull back. Maybe bulls can actually get a 10-point right there is with the third leg up. Now, I don't know. They might. So because they bought here, they're still looking for their 10-point. That happens to be probably 13 or 14 point. there. 1350, it might even go a couple of ticks, so we can actually hit the 14 measured from the pivot. But first, it has to take profit at 10 point. So what is it doing? What do you do? How do you know that this is going to go there or not going to go there? I just explained to you earlier. What do? You start to stalk some of the machines and try to make sense of what they're doing. This isn't selling, this is profit taking. Measure from this, put about 6, okay, or put about 5. See if the bears actually close a bear bar beyond it. If they can't, say they close but they can't go and, or they just closed above it, that's just a scalp. And then we're going to reverse back into here because that's not trend. That's just a deep pullback after second leg at the highs. But there's a chance then they can reverse it and resume the trend and get to the 10 point and then trap the bulls and get back inside. So you can't just quit the trend. You can take profit, hold on to it. If it's getting really strong, that means bears are actually able to scalp 5 points and then get a 6-point close. Now is the time to exit. And you don't even have to exit there. It's probably going to bounce first, give all these bulls an exit before printing the second or third leg down. So you just have to practice that. So yeah, I think the trading ranges are better for me, but I don't, I enjoy a good trend day now these days. So they don't happen all the time. So you get maybe once every 2 weeks a strong trend day or you get twice trends starting, Walmart trades starting around 11:30. I get good trends, good swings around 1:30 p.m. Eastern time. So you can catch a swing twice a day if you know where to look or what time they tend to form. So anyway, just not answer too long. The next question, what is it that attracts you to trading oil? It is just the price action that favorable. Well, oil moves with fundamentals. I read about it. If they say oil, they're going to mark it up to $80, $90. Most of the time, like a couple of days, maybe entire week, or the whole month, even if it pulls back, oil is going to be bullish. Okay, so I've learned to make my peace with that kind of fundamental reading. But it's just the oil chart is very clean, and oil is very easy to trade if you know what the machines are doing, which I have shared, which is tick counting. So oil machines are set to count certain amount of ticks and take profit or reverse the market right around there. So I kind of apply that. It's just so easy. But I trade ES most of the time. Oil is something that we just started doing because there are people who want to trade it. So otherwise, S&P is my favorite. I'm just getting back into oil again. I was very jolted and super scared with that big, it went into minus. Remember that? I think it was like two years ago or something. Oh my gosh, I was trading that day, and I closed the trade in green, and I took a break, and then I come back, and then this happened. I could have lost a lot. I mean, that day, it jolted me so much that scared me. I took a long break from oil, and I said, I can't trade this. It's crazy, and this is just too much. I've never seen anything like it in my life, ever. I kind of took a break from oil. I closed the chart, haven't opened it for months, and then I started getting back into it after pandemic. You lost $95,000 that day? Oh my gosh. Eesh. That is insane. But I guess you're lucky. People even lost a lot more than that, but 95,000. And that's the day you became single. I'm just kidding. Oh, just really terrifying. Anyway, that was a bad joke, but I feel for you. That's a lot of money. When you're considering supply and demand zones, you usually look for 3 consecutive strong trending bars. Do you ever consider any sell-off or rally less than 3 bars if the bars are really strong? No, I don't. If it's only 2 bars, it's probably some kind of a news related. I have a rule for it, so I don't really like no. So it has to be minimum 3, like this. Even one of them is a doji. If it's only 2, look what happened here. Is 2, look, there's a great example right here. 2 bear bars, really strong, got a second leg, right? So if you actually take part of that, now where is the swing there? It had to go all the way up here to trap and then sell. See what happened there? No. And but a good example though, now this isn't a good example here, but let me show you something. Oh, here, like for example, is you're selling and you got a really nice demand zone here. This is something like or buy zone. Let's talk about that. A good buy zone, maybe even here, 1, 2, 3. This is what I would take as a buy zone, not just here, but here. This whole area, okay, this is my buy zone. Now, if from a sell zone, say, let's call it, I'm sorry, that's not what I'm trying to, supply zone. And imagine that none of this is happening. Or maybe this is your buy zone, right? This is your buy zone right there. And they bought it. This kind of mitigated, so it's not the best. Let's say it's coming down. You see this bar is started to sell. Are you going to buy here? No. It's going to do a bounce, but most likely a bar like this is going to break this and probably wants to come down and test here. You can take the entire bar. I don't. But come on. That's my new demand zone. It's never been tested. I see a bar like this. There's liquidity here. They're going to break it. And in that process, they're going to break this. There will be a bounce, but you cannot buy the bounce. So you're going to use those bars, even if it's only 1 or 2, thinking this isn't a good buy zone. There's a much better zone I should buy from and not worry about buying and expecting a swing. Look. That's a bounce, and bam, they broke it. So many people buy that and get stuck thinking that's a swing. That's not. So if you're using that method, pay attention to these bars. They are zone breakers, I call them. They will break this zone and invalidate it. So this is a better zone. If you're going to buy, you're going to buy from here. So wait for market to get there, okay? But here's a problem. This one's now a lot bigger too. But it did get a bounce, but it's not good enough. But look what happened. Another big bar. So are you going to buy? No. Where is the next? Somewhere here, I don't know. But now they're start to swing from under. But that zone is broken. So you should not be buying. So I'm looking for, another one right there. So if there is a zone here, you're not going to be able to buy. Now, I can't see it because there's a gap. I'm going to take a part of that gap and move it. You can't buy it. If you buy, it's a scalp. So you're going to see if the market can break this area too. And they did. Look. You see these bars and you just cannot buy. But if it's like this, bunch of small bars coming down, nice pullback, coming down, then you look for a swing. Like this, strong gap down. So they're going to break that. So that's probably not a demand zone, except it's a support. But expect that support to be broken and price to move further down, maybe looking for some kind of a gap area before bouncing. So when everybody else is buying, you should be selling into it. That's how you know the zone is going to be demolished. Right here, look, is strong bar. You got a sell zone here. Leg 1 pullback, leg 2 pullback, leg 3. Everybody else is going to sell that leg 3. You're not going to do that. You're going to buy it because they're going to demolish this, because they're probably going to go there. Now there's another one, big bar, another one. So that means they're probably going to demolish this one too, possibly. So you're going to look for, oh, look, they did. That's actually a sign that this bear move may not actually continue down. Did a little bit, but look, not, this isn't a swing. It's just a pullback. And then it kept going. So those are the signs. And that's the part that I missed. I didn't have time to explain on Saturday, but it's just that that was part 2. I'll have another session and I'll go over it one more time. Anyway, like here is you have a 1 bar and a really terrible. So is this a supply zone? Probably not. This is a small pullback bull trend. Could last longer. Bulls are trying to get to this target, which is the midpoint of this bull channel. So you're in a small pullback bull trend within a trading range though. So bears are trying to get that 5 to 6 points, and they haven't. That's the second leg. If the bulls can trap those bears now, they can continue the small pullback bull trend. So watch that area. That is 4, 5. If the bears are not able to scalp a 5-point, look for bulls to take out the bar 31 high and continue the small pullback bull trend. There's a really good oil trader stories on Discord if you guys want to go read it. I think it's pretty interesting. Anyway, can market is, instead of reversing, can actually continue to swing and go test these highs. Where's market going? If we take out these highs, market is going here, which I had a red zone there, but I ended up moving or deleting. So it's a small pullback bull trend. It could last in there. That would put us into a bigger trading range. Okay. I am done with my session, everyone. I am going to see. Here is simple. Although, okay, so we're under. You see, that's kind of a small pullback bull trend, but ours is a lot more defined. And then from those highs, that's the second swing, brings us back to the lower third, and the buyers buy again. So trading range day, bulls are trying to reach somewhere as early as, we're not going to test here, we're going to test way above it. So the next is bar 13 low. I mean, if we get above it, is first pullback, they're going to buy into here. Remember I said, if we start to close above this buffer zone, it's supposed to be an arrow, then this is where we're going to try to swing into if we don't make a double top there. If we make a double top, then look for bears, double top neckline. Look for bears to take out the bar 32 low, get a 10 point for themselves, okay, because we're in a trading range. But look what's happening with the EMAs. Now, I said this is a more bullish day than bearish, even though we're going sideways, we are now pointing upwards. So it's a more bullish day, so it's a trending trading range towards up, than truly sideways, okay? They can buy the pullback perhaps and still go back up here, as long as we stay above this gray line. We might make this third leg up, is trap and then come down, but this is where the market is trying to go. I might even take that 2 bars right there. So we might go test, and a second sell could be a good swing down. Could last maybe 10 points or more, even maybe 15 or so. Like we could get this. Okay. Try and see what else is there that I can use. Here is another option, is double top, double bottom, failure for bulls and failure for bears, swing. Failure for bulls, double top, double bottom, and swing. So they made a new high, is most likely we will make a new high. That means we will get above bar 10 high. So leg 1 pullback, leg 2 pullback. I think bulls are still trying to get that leg 3, but sure, they're not doing a great job. Now watch bar 32 low. That's the second leg for bears. Leg 1, pullback, leg 2. If the bears fail to take out the 32 low with a bear body close, that's all they're going to get, and this is going to be double bottom at the EMA. Is if this bar closes bullish, bulls will buy and go high again. So 49.25 was our target before, and then we started to sell, right? So is right there. So now bulls are trying to get back to that and even further up high. So if I'm going to sell, I'm going to wait for market to take out the 10 high, okay? Or if we start to get a strong bear bar closing below the 32 low, I might look for a bear flag and try to sell into bar 23, okay? But that's about it. I don't want to sell here. This is still a small pullback bull trend, trying to last a little longer. Can this happen? Look, double top is neckline. Let me make this bigger. Richard told me to make it bigger so people can see it. Double top is neckline. So we take out that neckline, 3 bear bars. Here we did not take out that neckline. Or you could say is maybe this was the neckline. Nah, this is the neckline. But you got 3 bear bars. That means sideways and expect another leg down. Bears did get a 10-point minimum there, but buyers did show up here. Why? Evidence says that's a buy zone. So look for first and second and a good swing entry. Hold it all the way to the prior highs again. Hold it. That's your first buy signal. You put a buy stop above it. No one's going to buy it, not against. Everyone's going to wait for a second entry long. That is beautiful. Trap the bears. Look at this bar. Went below and closed like this. Just close your eyes and ears and nose. Hold your breath. Hit the buy button. Take this, project it twice upside. Is trading range. 1 time, 2 time. Or prior highs should be your target. Okay. Now I can't get out of it. Okay. All right, I am done with my session, everybody. So if you want to find your way around, take a look at the trading part 15. There's also a bullish version of it for a swing. We're in a swing could last another 6 bars or so. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 to 24 bars, 2 hours. And by the time we 24 bars from here counting, it could be 40. We could get a midday reversal from the sell zone. Okay. So you all have a great day. Tomorrow is Tim Stout and Brad Wolf. And then I come back on Wednesday. Bye, everybody.